Good morning, everyone. This is Daily Trade Analysis with the weekly recap for the week of the 18th of September. As always, in these videos, we are going to review from the fundamental data of the week, reviewing all the important information fundamental, and then going to the technical analysis from top to bottom on the equities, on the individual stocks, big tech companies, dollar, yields, small caps, sector funds, and also all the details you need to know to prepare for next week. So if you have been following our weekly recaps, they are really complete, they are really in depth. So sit down and prepare because we are going to spend at least 20 minutes reviewing all the details for the week. So first, starting with the fundamental data, this week, the most important day was Wednesday with the interest rate decision, in which we got a flat line of no interest rate hike. So we are at 5.5 fund rate, terminal rate right now, no hike. And I'm not going to cover in detail in this video the interest rate decision details because you have that exact information, all the details in my Thursday's video. So go there and please review because I go through all the Fed.plot economic projections and all the details you need to know why Jerome Powell and the FOMC kept the rates at the same rate and why this is not as good as other pauses that we got. So economic projections are quite important and I went through those in my Thursday video. So please go there. I'm going to focus on the rest of the information. So starting on Monday, we got housing sector going lower. So housing sector still shows signs of cooling down. That's really good, at least for the economy slowdown. But in terms of housing sector, if you are trying to make some profits in there, it's really, really difficult to flip houses, to work on houses, and even obviously afford new houses. Not only because the housing starts, new houses are in real cool down, but also because the terminal rates right now, if we are seeing the 30-year mortgage on Wednesday, showed that again we are ticking higher from 7.27 to 7.31. The 30-year mortgage rate obviously is following the funds rates and banks are still pushing higher slowly. We are still above 7% and this week is showing an uptick. Also, on Thursday, we got important data regarding labor market. Initial jobless claims lower than the previous one. And this is bad news. Bad news because it shows that obviously the labor market is still really strong, really tight. And Fed wants to at least unemployment and jobless claims to keep going higher. This is going in the wrong direction for the Fed, but at least it's showing that the economy is strong. And finally, on Friday, we got the S&P flash. This is a preliminary data. We are focusing on the services PMI. Remember that services is the part of the inflation that is sticky, and we are still about 50. That means expansion, not contraction. And we are upticking a little bit lower from the 50.5. But in general, the composite are about 50 and the manufacturing is showing signs of going higher. Still below 50 contraction, but it's keeping the pace up. So this is for the fundamental. Remember that the most important data we got is the interest rate decision. If you want all the details for that, please go to my Thursday video. And in terms of Fed Watch tool, in terms of rates, the markets are still pricing in higher for longer. They are not pricing in any interest rates for 2023, not even for 2024. So they are just pricing until June the 525, 550, and then start cutting. we got one cut, another cut, and another cut of 25 basis points until the end of 2024. This is what markets are saying, but remember that these 2 months are quite volatile. January, March, they are not clear that if we are going to have a new hike. Maybe it's in one of these 2 months. So pay attention to these 2 months because it may go higher in these probabilities. But apart from that, higher for longer and not seeing any lower rates until July. It's really, really painful. It will put a lot of pressure to the economy, households, and a lot of parts of the economy are going to feel the pressure from these high interest rates. So now that we got covered, let's go to the technical analysis. This is the Nasdaq weekly chart. As always, we are going to start with the weekly. This week has been really, really bad. Minus 3.40% for the Nasdaq, resolving down this compression that it's seen more clearly on the daily, but on the weekly we are seeing a huge red bar, minus 3.40. If we go to the continuous chart on the Nasdaq, on the NQ, we haven't seen this kind of bad week since I think it was like November or December last year. So it's the worst week of the year for sure, and the worst week since maybe even 1 year. This was a minus 2.90, minus 6%. So this is the big weekly. The previous worst week for the NQ was in October. So pay attention because the performance says a lot. And from the weekly, we are not finishing the monthly, but look at this. This month is minus 5.49. Really bad month since December. So the monthly chart, we are not going to cover that yet. Next week we will cover in that as September ends. And this is the daily. We are just there. We talk about this compression. We talk about the possibility of this being a bear flag. And basically that's what happens. Really, really technical breakdown. And I wanted to see some buyers stepping in at this level. It went through on Thursday and it tried on Friday. Yesterday, we tried really, really hard to be on top to try to recover 15,000. And on the 30-minute chart, I was watching this range because this was the breakdown from Thursday into Friday. This was the Thursday sell-off, big sell-off. On Thursday, we went in range, we stayed in range, but we have something really interesting, a late spike to the downside. Late spike means that the last hour of the day, price moved lower without any further time for traders and participants to try to revert that. We closed on lows, but interestingly, during pre-market on Friday, we just went higher and higher and higher. That was quite beautiful, and hopefully we tried to clear the price action on Thursday. We tried, but we couldn't break prior's high. That was really key. And once we couldn't, at noon, 11 o'clock, after lunch, sellers took control and they basically smacked down the Nasdaq to really put this daily candle as a topping tail, really bad looking, because I'm watching, at least for the lower part of this consolidation, I'm watching 14,634 as the next level of maybe support. And then we have a lot of space down here. So be really careful. We might see some kind of bounce, or perhaps going lower, and then bouncing like this. But I think this week is quite clear that sellers took control. Fundamentally, the Fed put a lot of pressure on stocks, high interest rates for longer, and these prices could not sustain longer. On the daily, it's even more clear. So the 1 minute chart, it was quite interesting to see this consolidation. We tried to go higher, but this chopping around and then the move lower, I mean, it's clear that on the technical side, we had this weakness. So at least everything makes sense fundamentally and technically. Buyers tried, but I think this market is more and more filled with sellers. In terms of individual stocks, Apple continues holding this, is not super strong support, but I think Apple is going to see this gap at least tested. At least tested. We tried to test the upper gap, we couldn't, and I think the obvious target right now is this 171, 166 big gap that we got since May. So Apple looking for the gap fill down on the daily, seeing quite weakness, a lot of wicks, topping tails, and big red candles. Microsoft, it's slowly but surely showing more and more signs of weakness, despite the fact that UK and Europe in general, it's clearing their Activision acquisition. This is not giving legs to Microsoft, and I think the next clear support is going to be this B12, and then we have this range. So Microsoft, it's going to find support here in this range, but for sure a move to the downside is expected for next week. Tesla, bad days for Tesla. Look at this 3-day performance, keeping a gap down behind, having on Friday a minus 4.23%. We have small support here. We have a gap down here. We were quite happy to see this break to the upside, but I mean, we couldn't even hold, and we start breaking down with the rest of the market. This is coupled with the fact that Amazon is also seeing a lot of poor performance since the top. Look at this almost week. This week we got, since Thursday last week, we got minus almost 12% to the downside. This is really big for Amazon. And with Tesla, consumer discretionary is not having its best moments, obviously, because consumer spending is going to be pressured with high interest rates for longer. So obviously these consumer discretionary stocks are going to feel the pain. But look at this performance. Really bad. I mean, we try with these, we try to go higher. We tested August 2022 at 145. But now we are at 128. Look at that. So really, this support was also tested and we gapped down. And look at where we are, right below. So I think Amazon is going to feel more the pressure. All the tech stocks are going to feel the pressure, but more consumer discretionary. 126, this level is going, I think, is going to find some kind of support, but still there's potential to downside, 3 points. And then we have another at 120. So let's try to not step in front of this freight trend, and let's see where it consolidates and starts seeing some kind of structure. Google, Also big red candles, rejection, leaving a gap down behind, and we are right below. Next target to the downside, 128, and we have a big gap here on earnings. So more downside. Nvidia, oh boy, since we tried again and again to clear all-time highs 500, there's no way. There's no way. We are slowly drifting lower and lower and lower, and it's quite the trend now. The first clear visual 405, then we have a little gap down here, and but there's a lot of potential the downside, and we have this huge gap on the previous huge earnings. So all this move was due to earnings. We are almost there, and this was on June, on May. So be careful because we are at a clear zone of buyers, but if buyers don't step in a huge way, the potential to the downside is huge. Is huge. Meta is trying to build their social media app and also some AI projects. It showed a lot of buyers down here, so this is a clear zone of support. And we have also this downward trend line. And but look at this week. There's a dodgy topping tail, red candle, another big red candle. I don't know. I don't know. Somehow this zone is being defended, but there's clear potential to the downside, and we have several there's no clear support in here, so we are flying in the middle of nowhere. We are at 300. 300 is the key right now, and if not, this is just psychological support. Where we will find support, we have to wait to see these kind of signs. So previously I talked about consumer discretionary. Let's now talk about a couple of sector funds that are quite important. The most important one is consumer discretionary. We have these and these descending coupled with this ascending that triggered this upside since May in consumer discretionary. Amazon, Tesla, Apple pushed higher. And since we reject there, look at this performance. There's a lot of big red candles since late July. And the last week, I told you about Amazon. Look at this performance, -7%. This is a sector fund. This is not a single stock. So we have to pay attention to this super weakness on the consumer discretionary, XLY, because this is 1/3 of economy. Consumer spending, consumer discretionary, it's really weak, and the economy is seeing, and the related stocks are seeing a lot of downside. So we are right now at a long support, but I don't think this is going to stop here. We have this zone of previous support. We might test 158, and then we have this huge potential. So don't be really careful with the stocks related with consumer discretionary, because this is not a sector, a strong sector right now. The same with technology. The stronger sectors right now are defensive. And I can show you real quick right now. I covered this in almost all of my videos. This is the 5-day performance. On the 10 days, we are seeing some kind of rotation. XLU, the first one, the defensive sector, XLV healthcare, and XLP up here. We have also financials and communications. Obviously, look at where is technology and consumer discretionary, -4%. This is a 10-day performance, but real clear on the 5-day performance, healthcare, utilities, and staples. So consumer discretionary, look at where are we? Look at this performance. This is what I show you on the charts. So I'm seeing a strong defensive rotation after FOMC interest rate decision, after Powell. And when Wall Street rotates this way, I think there's more potential. They are really, really scared. And not only the sector funds are rotating, we are seeing also crude oil. We've seen this fly and fly again. In the continuous chart for CL for crude oil, we see more clear the big levels that we got. 93. After we broke here, we've been this was a nice bounce. So after we broke here, we are just flying, flying, and flying, and flying. And we got a nice topping tail reversal, but still on this month CLX contract for November, crude oil is still trying with topping tails, wicks, but it's still trying. It's super strong. And this is going to affect the inflation in the midterm. So I think investors are really scared. Wall Street is really scared. And that's why we are seeing a strong rotation to defensive. So be really careful with stocks because I see more potential to the downside. Is there any risk on? Is there any small caps that are pushing? Clearly, no. Clearly, no. We have this gap that we are continuing pushing down this gap since June, and there's clear weakness on the small caps. How about Bitcoin? Bitcoin is, oh boy, look at this volatility. But we are trapped in this huge range between 25,000 and 27,000. There's plenty of downside potential. Look at this. And I think if sellers don't step in here, they will do it back here. So be really careful with Bitcoin. There's clear weakness on risk on assets. So who is green apart from crude oil? Dollar is slowly but surely. I covered this on Thursday. We are at a critical resistance, 106, after months of slowly grind up. I can see dollars going to 108, and this is going to be painful for stocks. But yields are at an insane level. This is the 2-year yield. Yields are at an insane level, 5.2% on the 2-year and 4.4%. So this is all related. So if yields continue moving higher, drifting higher to levels not seen since June 2006, like 5.3 on the 2-year and the 10-year, look at this push on the 10-year. Insane level. If yields continue moving higher, dollars is going to be stronger and stronger. And this is going to be a killer for stocks. So pay attention to yields, pay attention to how all the monetary policy affects these kind of key assets. Because if these continue going higher, I mean, stocks are going to feel more and more pain. Financials are already seeing pain, XLF. Look at these 3 days, they are being destroyed, and we have a huge potential to the downside. So be really careful. Be really careful because I can see we broke down the structure on the technical side with the fundamentals backing up this move to the downside. So I can see more downside coming, maybe not super strong and momentum, but I can see the Nasdaq going lower the next week. So that's all. We covered everything. I provide you with all the information that I've reviewed, I have analyzed, and I think it's quite important to have in the back of your mind to start Monday to really manage your expectations. But from now, just enjoy your weekend, review your levels, and let's find out next week if we can find some buyers or we continue lower and lower and lower. For sure, things are not looking good, but let's see what happens. So thank you for your time. If you found this kind of videos useful, please give it a like, subscribe to the channel. I upload videos every single day for market forecast, market updates, and market recaps. And on a weekly basis, a weekly recap like this, covering all the fundamentals of the week, following up with the technical side for Nasdaq, equities, single stocks, dollars, sector funds, all that you need to know. So thank you for your time. Remember that discipline and risk management are key for your success. Have a nice weekend and see you on Monday.